Welcome back, everybody, to The Financier. I'm your host, Vijara Kohli. Today, we'll be talking about UiPath. It's a robotics process automation software. It's a very exciting company coming to market in the next few weeks. This company does an amazing job on automated software. It's pretty cool. I'm going to talk about its path to $1 billion, what's going on. I just released a newsletter this morning. You can check it out on the techfinancier.com. We're going to break down what this company does, how old is it, who owns it, the customer base. If you're familiar with the company, please let me know. I'd love to know where you're talking from, where you're streaming from, and then comments and concerns about the software, enterprise, anything that you've seen about this. Love to get feedback. Obviously, RPA is a pretty hot buzzword right now, and these guys are crushing it at the current moment. So let's open up with a couple of new stats. This is the current stats from its pitch deck, $580 million in recurring revenue at the current moment in time. At a 65% growth rate, this company is going to hit about $1 billion in sales in the near future. It'd be pretty exciting. 8,000 customers is a lot. We'll talk about how they access those customers. It's through channel partners, which is pretty important for the IT services industry. You see that the customers, they have 1,000 customers paying over $100,000 contracts. That's a really big needle. We'll talk about the sales cycle soon, but getting contracts over $100,000, they have a lot of them that are over $1 million. Getting those contracts is pretty difficult. It's a long sales cycle, so it requires good financing, good operations, and a very good product because you can lose those sales contracts after a period of time. So this company's done an amazing job. So let's go into the history of the company. Actually, before that, we'll just talk about what they do. They integrate a lot of these tools, software products across the platforms. You'll see IBM, Oracle, Amazon, all these things, these tools. They're basically your assistant, your robotic assistant to get repetitive processes done and out of the way. It's a great functionality. Obviously, there are a few ways you can do macros, programming, software, but they have a better and cleaner interface to get this done. And then obviously they have a more advanced computing power through their own product, which is proprietary, which is why people use it. They can get a lot of reporting and analytics, and then get a lot of the challenges that are just menial tasks that maybe a lower level employee or someone who's just not doing advanced tasks like sales and management, that these repetitive tasks can just make their life easier, which is pretty exciting. It's something that we need to see more of. It's a real level of machine learning and deep learning that's important. That software just needs to be intelligent. That a lot of it is not intelligent. A lot of the software today is just macro steps. You input X, you get X plus 1 or something like this. This is an exponential growth in that sense. So company's history, it's really interesting. I thought this was very peculiar because it's very rare to see this happen. One, the company was founded in Romania. It started as a tech outsourcing company. A lot of software companies start in this IT services way. But you'll notice from this timeline on my left is they've been around for 16 years now. For the first 7 years, they had $0 in revenue. So they're very much bootstrapped. They built a product that had no revenue. When they raised, I think, $1.5 million in seed funding in 2015, they were able to produce about maybe $500,000 in revenue, and it came to $1 million recurring revenue, which is impressive for sure. But you have to think about 7-8 years of progression to get to the point. It took them 10 years to really hit a somewhat of a decent revenue run rate. But once they hit the revenue run rate, it was off the charts. They were doubling revenue for the last 5 to 6 years. Now they're at $600 million, as we showed before, and they're definitely on the path to hit $1 billion. So I'm very impressed. In February, they raised $750 million at a $35 billion valuation, making them one of the most valued private tech companies in the United States. Now they're planning to go IPO to raise $1 billion. So they're going to blow it out of the water. They're really going to create. So just to give you an idea for people that aren't familiar with RPA, this is a level of low code development. So this is you don't have to be an expert in Python, PHP, and other advanced programming languages. You could figure out how to develop a simpler interface, building it on their platform, and you don't need to be an advanced programmer to figure out how to build basic level software. No code is very popular at the current moment in time, but low code has been around for a very long period of time. I think Aperio or Appian is the other one that produces something like this for low code development. They've been around for 20 plus years. So it's pretty cool. Daniel Dines, the co-founder of UiPath, was an engineer at Microsoft. So he built a lot of the scripts and the complex functions based on Microsoft's cloud and on-premise software. So it's very impressive to see this happening. This is pretty cool. If you have any thoughts or comments, we got a couple people chimed in watching live. Feel free to let me know what your thoughts are, what you've seen about this company or any other low code, no code products, software. I'm very interested in this space. So this company is growing at an amazing rate. Software investors, technology investors use a rule of thumb. It's called the rule of 40. They look at what's the combined revenue growth rate and the EBITDA margins. And if it's above 40%, so this is the example. If a company is growing at 25% revenue year over year, that's great. But their EBITDA margins have to be at 15%. So it's at 40% combined total. If it's below that, then it's hard to finance a company that's one, not growing fast enough, and two, doesn't have the enough margins to become profitable. So this company is actually at 63%. Its growth rate is amazing. It has 145% net revenue retention, very healthy organic. Well, I'll show you in the latter slide that the company has been able to actually extract and upsell more from its current customers, which is the best way to do it. Salesforce, all the top players do this. Microsoft, it's the easiest to make money from your current customers than it is to go find new customers. So here we go, 81 times the annual revenue multiple of the top 50 customers. That's a big jump for any business, but for a software business to do it at high margins, producing high growth on top line revenue is just very impressive. I will mention that this company is now based in New York City, which is pretty cool because there are very few tech companies based in New York, even with the recent tax rate hike. This company is still probably going to reduce its footprint, but it's going to be a New York tech company, which is very it's different from the general Silicon Valley tech companies. So this is impressive. For the 7,000, just under 8,000 customers, we saw the customer count actually growing by 33% in 2021. So these guys are really just adding. The biggest thing is that they have 3,700 channel partners. This is Cognizant, Accenture, all these big players that are the consultants that will go out and license the software from UiPath, then upsell and increase their service premium to their clients who really need the software and don't have the time or resources to install it. So those channel partners are very important for software. It's very underplayed because a lot of people love pure play software, but they don't have the sales or marketing effort. And UiPath has kind of figured out the distribution on how can they get the most number of customers to the most profitable channel, and channel partners are that way to do it. So to add to that, these enterprise software products have a very long sales cycle. It could be 18 to 24 months, and that hasn't stopped UiPath. In fact, they have $1 million. So before we were talking about they have $100,000 paying customers, which is a very big number. Now they have $1 million paying customers. They had 21 in 2019. In 2020, that grew to $89 million paying customers. And that's where the margins and the resources really begin to add up. When the delivery gets better, they get to create a customized product. It doesn't become scalable, but they've pulled it off. They're almost 4x in that sense. So they 5x. So they're really pushing a very impressive growth rate. Both either, and at the same time, they're growing their $1,000, $10,000, $100,000 customer price points. So they figured out both the barbell, so the high end and low end, which is very impressive. So to wrap it up, they have strong top line growth, increasing gross profit margins, and high gross margins as well. And then they're figuring out now how to reduce their operating loss, which has been reducing for the past 6 to 8 months. And their sales and marketing efforts are very, very unique and differentiated from the regular pure play SaaS companies. If you got any thoughts on this industry, the low code, no code, it's very hot. I would put this company on your watch list. It's going to raise $1 billion from its IPO. It's very different from the Coinbase direct listing I mentioned a few days ago, but it's worth noting that here's a software company, is a very strong customer base, 8,000 customers. It's producing sales. It's very high growth. It's very exciting to follow. I think there'll be more of these companies that will focus on how they can combine their software, pure play software, with professional services. It has a lower margin than having a pure play software, but it's more profitable and the cash flows are very consistent over a period of time. UiPath is proving this. I think there'll be a lot more competitors to enter the space. There'll be more advanced technologies. UiPath is not going away. They have a resilience in this space because they've been around for 16 years. And you got to remember the first 7 were zero revenue. So if you can pull that off, you can definitely pull off a multi-billion-dollar business. So that wraps it up on the UiPath IPO. It's upcoming. You can check it out in the newsletter. It came out this morning, both on LinkedIn and the techfinancier.com. You can always subscribe and hit the notification bell on YouTube if you like to watch it there, and on Twitter. You can always follow me on any of these social platforms. I'm answering questions on Twitter and Quora almost every single day. So feel free to keep chiming in. Let me know your thoughts on the industry, software, IT services. If you've done anything in low code, no code, I've done a lot in Webflow, Airtable, a lot of the new products that have come out and have done really well in the last 12 months. So I'm very excited about this space. I want to know what you're thinking about. So let me know in the comments, and feel free to like, share, and subscribe at your convenience. Take care.